Ladies and gentlemen, good evening. I'm Sarah Edmondson, Chief Executive of Coro Energy. I'm sorry that I couldn't be with you tonight, but rest assured that I am traveling on Coro's behalf to faraway lands so that I can better position this company to delivering exceptional results from day one. You will have seen the strategy announcement recently. The overarching theme here is Pan-Euro-Asia, high-impact exploration, multi-TCF gas plays, with an initial growth strategy out of Southeast Asia. You will have also seen the announcement on the binding agreements. Subject to shareholder approval, Coro Energy will effectively be a full-cycle E&P company with high-quality assets located in Italy from day one. I've said this before and I'll say it again. That's not a bad place to start. Let me just spend a few seconds to walk you through some of the highlights of that portfolio. Coro Energy will effectively have 5 production concessions which will contribute to both immediate production as well as incremental production opportunities. In addition to that, Coro also has development opportunities, including a field that was recently drilled called Selva. The drilling and initial production results have been fantastic and are truly some of the best results seen amongst independent players in Italy in recent years. This is some of the cleanest gas in the world at 99.9% methane, flowing from those gorgeous, permeable Pliocene sands. Another exciting development opportunity is Teodorico, which is an offshore gas development in the shallow waters of the Adriatic Sea. This alone could ultimately quadruple production from the Italian portfolio. But we would not be a full-cycle E&P if we did not have exploration. And in this respect, there are a few leads coming from both the Apennine and the Po Valley legacy portfolio, the most notable being Torre del Moro. Torre del Moro has prospective resources of approximately 200 million barrels of oil, which is an equivalent of 1 TCF of gas. Like I said, not a bad place to start. And these foundation assets effectively underpin our larger ambitions of growing a sizable multi-TCF portfolio in Asia. Now, we have very specific investment criteria for new acquisitions, and more to the point, jurisdictions where we would like to operate. Effectively, we're looking for gas, high-impact exploration, but we'd like to do that onshore or very shallow offshore. We're looking for areas where it's easy to commercialize that gas, which ultimately means that infrastructure is already in place. And we're looking for growing markets, but not just growing markets that have historically shown a strong and stable gas price. We believe that Southeast Asia possesses some of the world's fastest developing economies, where demand for gas currently outstrips supply. Now, if you combine this with increasing growth across the region and the increasing shortage of gas in the major markets, this provides a compelling investment proposition for you, our investors, at this specific point in the cycle. Ladies and gentlemen, we are at a threshold, the starting line of a new beginning. Come and join us on the Coro Energy journey. Let's do this.
Well, thank you for that, Sarah. Hi, everyone. I hope you enjoyed the production quality there. As you can probably see, Sarah's putting the proceeds of our recently announced placing to good use. My name's Andrew Dennan, and I'm the new and recently appointed Chief Financial Officer of SaffronEnergy. Saffron is an AIM-listed oil and gas explorer and producer, currently suspended from trading, as we're currently in the throes of transforming this business into a fully funded, scaled-up, full-cycle E&P company under the control of a new and accomplished board of directors, and in order to execute a new aggressive international growth strategy targeting on pan-European and Southeast Asian regions. With so much action going on, we're making a step change in direction. We also believe it's relevant to rebrand and reposition this company, and we're also seeking shareholder authority to rename ourselves as Coro Energy PLC to reflect this new journey. As part of this immediate journey, this week we ticked off several key milestones with us announcing the binding SPA between Sound Energy's Sea Hill subsidiary, which holds all of their Italian assets and licenses, and Po Valley Energy's subsidiary, Po Valley Operations, which similarly holds all of their Australian licenses. Italian licenses. On completion of that merger, what we're going to have is an entity which will have a substantial initial footprint spanning Italy, mostly through the northern regions, but also expansive all throughout the length of the country. Additionally, this week you will have seen us announce our new strategy, intention to open offer, and lastly, resolving any funding queries with a conditional placing subject to shareholder approval at the same time as everything else we're seeking shareholders' blessing to proceed on. As Sarah said, she unfortunately can't be here, as well as James, our new non-executive chairman. So please excuse the notes. This is my first time, and as you may have seen yesterday, I was recently appointed, and with the precursor being all of that work we've been working on, in terms of this, I just want to make sure we get it right. So I'll be making references throughout. So Coro Energy, it's a Euro-Asian-focused explorer. We're forming a very distinct rebirth of the entity that you've formerly known as SaffronEnergy PLC. This new business has the benefit of new direction, driven by a new board of directors with new funding committed from long-standing financial partners in order to explore new opportunities for our valued shareholders in wider Europe and Southeast Asian territories. We will grow shareholder value by building on the consolidated and enlarged Italian assets, continuing to invest in a high-quality portfolio of existing gas reserves where we have great opportunity to significantly enhance cash flows in short, medium and long-term horizons, as well as some potentially high-impact exploration targets, as Sarah mentioned in her brief video. This will continue to build on the momentum, the current momentum we have with Selva, which was recently announced to be successful at the drill bit with a significant gas discovery alongside farming partners United Oil and Gas and Prospects Oil and Gas. In addition to exposure to a robust full-cycle Italian E&P business, investors also benefit from the value we believe we can create from the skills and experience of the new board, senior executive and management team, who following completion will be fully funded to tenaciously lead an expansion and growth strategy through targeted exploration, focusing on assets that are in favourable jurisdictions, where we have a commercial or operational advantage that we think we can deploy and capitalise. Assets that we identify as being multi-TCF onshore gas targets. We perceive these to be relatively lower cost and on the success case still having the big high impact upwards inflection points to the net asset value growth of our balance sheet, which we see as the precursor to driving shareholder returns. Assets that can be piped to high value growing markets are very valuable to us as well. So we can have better visibility on the commerciality or potential trade sale of these future assets once we've firmed up the value chain and operate with that confidence in mind. The new board of directors sets its stall out quite honestly. This is a board who play for big rewards in a diligent but also transformational way. You've probably seen them in action before. We've already seen Fiona presenting tonight, and I'm sure most of you are aware of Sound Energy and the journey that they've been on. This board of directors have a very strong history of being private investor focused. They're highly driven, financially aligned with investors, especially in the case of Marco, whose investment vehicle recently just announced his cornerstone investment of £6 million. As I mentioned, I'm sure it'll probably be quicker for us to count the number of hands of people that don't know James, but just in case we need to recap that again. James has 20 years experience in the fields of oil and gas. He's an international M&A at Shell. He's currently Chief Executive Officer at Sound Energy and Chairman of Coro Energy, and he resides on our board as non-executive chairman as well. He's a man who's led the growth of Sound Energy from a £25 million market cap to when he became CEO to over £500 million today. He's experienced over in Southeast Asia and has been quite vocal about having unfinished business over there, with a wealth of long-standing contacts, relationships, and now our access to capital. We look forward to delivering you a transformational new transaction and monetising that connectivity. Similarly, as we briefly saw Sarah, she's our CEO, previously CEO of Po Valley Energy, having joined the company in July 2010 as CFO. She's a great technical insight into the company's enlarged licenses and is very passionate about the industry. She's fluent in Italian and works out of our Rome office, which is a stone's throw away from the ministry, where she engages with and continues to grow relationships and move things on the ground over there, which are very valuable to us in terms of process and order. Similarly, she's got very great industry contacts and relationships to promote our advantaged access to new assets in Southeast Asia, which we hope to deliver to you in short order thereafter. We've got Fiona as non-executive. I'm assuming there's no requirement to tell you about her since we've already met with her this evening. And as I mentioned, Marco, who also Fiona similarly mentioned, he's an NED at Sound and Echo, as he is here at Coro as well. Marco recently floated CIP Merchant Capital name, which some of you may or may not have seen. It's an investment vehicle, closed-ended capital growth-focused fund. And he was co-founder of such. He's announced this week as a cornerstone investor, taking up £6 million of our £40 million oversubscribed placing. Rest assured, what I really want to communicate to you is that this board is financially aligned with its investors. Marco has a track record of making extraordinary returns from investing in conviction opportunities. And if you look into his background, he's been very successful in private equity, and that seems to be the approach that he deploys when making investments. And I just point that out because I think there's some salient points that we should just take from that. And it's just to know what it means to be a private equity approach. And I think that means minimum dilution, maximum exposure to conviction plays, high value inflection points, cash or cash equivalent exit point in the future. And that's also the model that we're applying here. In terms of our key investment highlights, we're building a mid-tier international explorer and producer of natural gas. We believe we have the ability to deliver this to you and have mitigated risks, we believe, on the following basis. Number one, we have the vehicle. We have an attractive asset base in Italy with some relatively low risk and inexpensive ways of enhancing cash flows to underpin the business as a going concern, demonstrating great and long-standing operational and technical experience. Number two, we have the financial resource to fuel our vehicle. Access to capital is paramount, and coming to the market as a fully funded proposition allows investors to own our shares with confidence and allows the board and executive team to negotiate with a distinct commercial and competitive advantage. Number three, we have the team. We have a world-class technical and operational team headed up by Leonardo Salvadori, Managing Director of Italy. He has a long and successful 30-year career in oil and gas. He has a history leading new venture teams in Egypt and Italy. As a geologist and geophysicist, he spent 20 years at Eni with strategic roles, most importantly to us, in Asia and Indonesia in particular, where he spent 3 years as Eni Indonesia Exploration Business Development Manager based in Jakarta. During his stay in Indonesia, he was responsible for 10 exploration blocks located in different petroleum systems, where he achieved a 90% rate of success on all exploration wells drilled in such period. He's also completed the acquisition of 3 operated blocks, in one of which a significant discovery was made of 1.3 TCF gas. He's managed to establish a solid network of the local operating environment and built a very strong network and business links with Indonesia, which have continued to grow over the years, and now stands to the potential benefit of our of our shareholders as a whole. Number 4, we have the direction. We have a strong board with a proven track record, as I've just spoken about, and this board is implementing change and driving tenacious growth, which we are excited about delivering to you. Number 5, we've got the green light. We believe timing is right at this specific point in the cycle, and you have the conviction of this board and its financial partners' capital in support of that statement. Okay, so compelling case for gas. Why is the timing right? Well, we believe there's a compelling case for gas. Inherently, we see gas as a more stable and favourable pricing market than oil. But let's stay focused on exactly what we're executing here, and that's high-impact, multi-TCF exploration plays, which we've identified initially in Italy and more wider Southeast Asia. Why those regions? Well, we believe they have the right environment for us to deploy our high-impact, value-accretive strategy, and with the greatest possibility of creating tangible, significant returns for all of our shareholders. Firstly, we assess that there's compelling supply and demand fundamentals. Investors in Coro are de facto investors in Italian oil and gas proposition, so it's probably widely understood amongst you all that Italy remains a net importer of gas. And again, we have the benefit of high Mediterranean gas price, currently around 22 cents per standard cubic metre. That's peaked up to 25 cents, but we do see a very stable environment there, and we expect these firmer levels to remain over the short and medium term horizon. We look to Southeast Asia, and we also see compelling fundamentals in an environment where demand for gas far outstrips supply. Indonesia has the largest gas market in Southeast Asia, with industry being the biggest driver for growth and demand, mainly led by power production and fertiliser. And this is anticipated to continue, with annual growth rates estimated to be circa 5%, resulting in Indonesia being on the trajectory of becoming a net importer of gas by the early 2020s. This provides further upside for us, we believe, in terms of catalysts for investors entering at this specific point in the cycle. Secondly, we're looking for excellent existing infrastructure. If you're going to make a discovery, it's only going to be worth something if you can make money out of it. It sounds simple, but we've all seen good projects stagnate or erode in value because the capex to bring them into commercial operations is too high. We're looking to try and mitigate that risk here with already our initial access to capital and our strong funding position. Moreover, we look to explore in areas where there's already the sufficient infrastructure to allow a more sensible CapEx program to bring about commercial operations. We have that in Italy, where there's an extensive gas pipeline network, and even within our own portfolio, we see opportunity to plug and play different plants and equipment to potentially enhance and grow those immediate short-term cash flows. We also noted in Indonesia, as Southeast Asia's largest gas market, so continuing on that theme, we're seeing evidence of extensive gas pipeline networks there. Moreover, we're already seeing the fundamental drivers at work and driving investment with the recent announcement of the upcoming $1 billion Borneo pipeline tender. Thirdly, we see favourable operating environments. With Italy having strong gas pricing, competitive fiscal terms and low onshore operating costs, the company has long-standing in-country operating experience, and the combined entity now has industrial mass behind it when communicating with the ministry and other trade partners. In Southeast Asia, we observe strong economic environment with increasing GDP growth, an investment-friendly government working to reform the industry with investment changes to boost efficiency and production. They have declared 4 upstream oil and gas projects as strategic projects for investment. They're also focusing on investment in a national infrastructure plan with downstream projects in refining and gas distribution, and said last year that it aimed to bring up to $200 billion in foreign investment in over the next decade, including incentives such as tax-free import of drilling equipment. Additionally, we have a team with prior experience and existing relationships, and as per the RNS of my appointment yesterday, Sarah's comment was telling about our optimism to further enhance our regional presence, capacity and capability with a series of high-profile appointments. Skipping through. No, back. Yep, thank you. In terms of that journey, I think this slide hopefully gives you a pretty good snapshot of what we think the ingredients are to be able to deliver exceptional value for our shareholders. And that starts with cash flow from the Italian portfolio. This merger of equals substantially increases our hydrocarbon portfolio. With that, it gives us the opportunity to look at a relatively affordable expansion of daily production through a work program. That work program can be brought to you quite sequentially to give you sustained news flow as we develop that opportunity. With those enhanced cash flows, we can see those revenues to be used to be able to de-risk further development or further exploration opportunity. And we're delighted to be able to offer you the combined skill set of this very experienced executive and operational team that we're putting together for you. On building on that solid base and replicating some of the main themes there, we're looking to immediately execute our international growth strategy. That's going to be focusing on wider European and Southeast Asian territories for the reasons we've just discussed. And again, high-impact multi-TCF exploration gas assets, which is the theme that Sound have conquered and which Echo are pursuing as well. We have the highly experienced team, we're capitalised and we're ready to execute. Acquiring attractive new assets at discounted prices is where we believe we can bring you value and unlock that over the short and medium-term horizons to deliver you exceptional value as shareholders. Now, we're going to be coming out shortly with our admission document and shareholder circular, which will contain all the most up-to-date reserve and resource reports, asset profiles and further details on a much more granular basis. So we're not going to dive into that level of detail here today because those CPRs will be out in the next fortnight or so, and therefore the information that we're speaking about is highly likely to be subject to change. So we'd much rather address you once that final data set's prepared and we can come and talk to you about those finalised numbers. Of course, as we've already mentioned, Selva is still a live situation, and like I say, we'd rather address you once we know the knowns. However, what we are looking forward to doing is obviously getting that information out there, which we hope to be able to publish around the mid of February. But as an overview, for our first footholding in Italy, what we do have is an attractive blend of production development and exploration licenses. In fact, that's 5 production licenses, which are no easy task to get and really do stand testament to our capability, operatorship and relationships in country. This asset base is cash flow generative with relatively low risk and low cost programs to accelerate cash flow over the short, medium and long term horizons. The asset base we estimate to come in with 2P proved and probable gas reserves of just over 43 BCF and 2C gas resources of 44.6 BCF. In addition to total 2C oil resources of 2.4 million barrels, an exciting upside in exploration, as Sarah mentioned, with opportunities such as Torre del Morros. This is a fantastic portfolio to be invested in, with the chance to really enhance cash flows to become above and beyond a continuing going concern, allow us to de-risk our exploration program on the merit of our own operations, and operate a full cycle E&P portfolio. We can evaluate a suitable program to deliver you sustained news flow and make sure that we are moving things in a sequence in which is targeted and deliberate. Finally, the theme that really we want to be finishing on here and leave you with is our international growth strategy. As an investor or a potential investor, I believe this is more than likely to be a key consideration for you in determining whether you would like to own our shares or not. This is where I believe we really do have a USP and is potentially the most short-term, high-impact event to benefit future or existing shareholders. What we have is unique and privileged access through long-standing and trustworthy international relationships. Not everyone has that. Not everyone can operate on the international level that we're aspiring towards. We've got a credible board. We've got an executive team of commercial, deal makers, and more importantly, closers. We have the strength of a well-funded balance sheet, allowing us to be bold, direct, and negotiate with confidence. We have an aligned interest between the board, our cornerstone investor, and our wider shareholders, so no one should feel disenfranchised. We have a new targeted strategy looking for good scale projects which can be value enhanced with our financial, managerial, and operational resource and capability. We have scale, momentum, and tenacity to execute within this immediate window to participate in the anticipated upwards inflection point in this cycle that we're presenting to you and we've identified, and we'd love you to be able to participate with us along that journey. We're, like I say, hopefully getting our emission document out very shortly, which point in time shares will come out of suspension. There will be a lot more definitive information that we can speak about in terms of reserve reports and work programs and things like that at that stage, as you can appreciate. So in terms of some of the questions, please do bear that in mind at the moment in time in terms of the information that we can disclose. But otherwise, quite happy to maybe take some questions.
Okay, thanks Andy, thanks for that, I appreciate that. It's a good presentation. Bear in mind that Andy was parachuted in at the last minute because the board couldn't come there. So I think we should give him a bit of a round of applause. Go on, Andy.
If I have the notes next time you see me, then yeah, I deserve to be told off.
Right, just a quick one. I'm just going to give you 3 quick fire questions because I've no pressure at all, Andy. Right, just because you're the CFO, you've only just came in yesterday. But I take it that you've been working with the company for months, if not 5-6 months, if not.
Yeah, I've known James for many years, and
so it's not as if you've just taken over as of yesterday and you don't know the financial state of the company. Right, so I'm going to test you. Okay. Right, what's the current cash position coming in from the Italian assets for Coro?
The current cash position coming in
per month.
Okay, so revenue on the existing asset and the incumbent asset base is probably about 2.5 million euros a year.
A year, okay, that's fine, I'll take that. Okay, post the Coro admission, it actually coming back to the market, and after the vote of the shareholders to accept the placing, because we know that that's just,
it's all conditional.
It's going to be, well, basically it's going to come through, isn't it? It's not going to be knocked back, it's not going to be voted against. What would be the current cash position of the company?
Following the completion of the placing.
Following the completion,
well, we've done, in terms of the placing, you've probably seen that there's some commission involved there. We've spoken to actually some of the parties involved and got them to take that in stock, backing the story and believing in what we're doing. So the net proceeds received on this £40 million placing will be circa 13.7 million.
Okay.
And you should be aware that we have a firm placing, which is being placed to our cornerstone investor, Continental, which immediately gets in just over £550,000 to the business tomorrow or early next week.
Okay, and the last one, what are the liabilities, the cash liabilities, as of today?
As of today? Well, as of today, it's kind of irrelevant because as of tomorrow, there will be an enlarged entity with the admission document. So I think you're probably asking the right questions to test me, but maybe in terms of the context of the answer there, it's probably not relevant. So again, I'll just defer to the fact that we're going to be bringing you out some really up-to-date information on that enlarged entity very shortly. That will be the real true information that you're going to need to make an investment decision. So I'd rather wait till we get the right number.
And just the last one, just one. We all know the success of Sound Energy. We all know the success of Echo and the continuing success of Echo and Sound. This is like, it's the third one, like what we call the Holy Trinity as shareholders. So do you see this going the way that Echo went and the way that Echo will probably go somewhere along the line to rise? Do you see, good gains for shareholders when this comes back? Do you see it trading at 10 pence, 12 pence, 15 pence?
It's very hard to say where the market's going to value at. What I can say though is you've got a board there that are very reputationally exposed. They've done a great deal of successful deals in the past. they wouldn't be trying to risk that reputation and their ability to do the next deal in the future if they didn't have a conviction here. You've got Marco, who's put 6 million in of his Continental Investment Partners money. Again, a man who puts his own money and stands on the board and drives the strategy forward as well is a man of conviction. So what we do have is a board of directors that will listen to shareholders. We've already noted that in the announcement that we put out on Monday that we'd have the intention to open offer, which will hopefully allow as many investors as possible the opportunity to participate on the terms of the placing that we've just done. And we're going to deliver 100% on this business and move it forward with aggressive tenacity.
Okay.
Okay,
yeah. I believe you. Okay, any questions?
Thanks for that, Andy. I just wanted to ask, obviously, as Brokerman Dan said, this is made the holy trinity of the companies. It seems like there's some great ideas coming on board and a fantastic start, as Sarah mentioned. But looking further down the line, what is the ultimate objective, say like 3 or 5 years on the time horizon?
I think this vehicle, and the point in my presentation was the private equity approach. What we're looking to do here is try and have low entry points, so whether that predominantly means using our paper as currency to make acquisitions as opposed to using our cash, so we can take our equity capital, deploy that in the ground and create high value inflection points. You've seen obviously what the similar team have done at SoundEnergy. You're seeing what Fiona's being able to bring to you here as well. My CEO and chairman are unfortunately unable to be here with you tonight because they're working on a transaction to be able to deliver shareholders of the future. So hopefully you get an idea of how serious we are about moving this thing forward. I know Saffron, as of old, was positioned more as a producer. We're taking a step away from that. I think we are exploration and production, but with a capital E on exploration and a lowercase p. And that's where we really do see the opportunity of significantly enhancing value and building a business of scale that could potentially be trade sold or taken out or otherwise. So yeah, I think three-year horizon would be probably around about the sweet spot for what we're looking to achieve.
The question I pose is, on your presentation you mentioned the term Southeast Asia. That's a very broad place. Could you narrow it down where the estates that you're looking at, or?
Well, yeah, that's a good question. We can't narrow it down too briefly because there's quite a lot of diligence and screening going on at the moment. We wouldn't want to pigeonhole ourselves to one country. I think in that presentation there was some reference there to our team and some of their experience in Indonesia and some of the privileged access there. In terms of that being already quite visible and well known, one would assume that that would be a country that we would have some great access towards and the ability to transact in, but it's not the only country. So we will hopefully be able to give you further guidance on that, but just at the moment as the net is narrowing still, we wouldn't want to come out and as I say, pigeonhole ourselves into one position.
And the question here, I would like to ask a question. We know that Sound was involved in Asia in the very early days, having assets in Indonesia, and then they decided, because of what was that specific time, to just focus on Europe. Do you think that was because the assets were good, but was not the right time, and Sound was too small, didn't have enough capital and backing in order to progress those assets? Or James, keep cultivating those relationships and just find the right vehicle in order to execute that strategy?
Yeah, I mean, James is obviously the best positioned person to ask that question to. From my dialogue and my relationship with James, what I can understand is that Sound withdrew from Southeast Asia at the time where they were capital constrained. There was an active drill program going on, and there was more opportunity perceived in the Italian assets. I think James has also probably been quite vocal on a wider audience basis about having unfinished business over in Southeast Asia, developing on those relationships that he has and cultivates. And now we do have access to capital. We can participate in these high impact opportunities. They're the sorts of transactions we're looking to deliver to you.
We were speaking about Argentina, but then again, obviously with this one, we're talking about Indonesia, maybe. Now I know that a couple of AIM companies, at least have fallen foul. We're working over there. We talk about the country being corrupt. How do you feel about taking shareholders into an area where some of them have been in AIM companies that have been not had a good time?
Yeah, that's a good question. I mean, an AIM investor has many confirmation biases from his or her previous experience in investing. As far as we're concerned, this is about a value proposition. We believe that we can go in there and we've got the right executives and the right board and the right relationships to navigate those in-country risks and those potential pitfalls that you could come unstuck with. We believe we've got the technical experience to delineate the right assets, and we've got the financial resource to deploy it. In terms of an investment proposition in Indonesia, I don't think there is huge amounts out there otherwise. I think we are relatively unique in terms of our size and space as a listed constituent on AIM. That gives you a unique value proposition in itself. So there is a reason to own our shares if those territories are of interest to you. But otherwise you have to entrust in the board the gravitas that they've got, the historical experience they've got, the previous operating experience they've got in country, and the understanding that we wouldn't be going back to do something there if we'd had a sour experience the first time round for some of those reasons that you've mentioned. And I think ultimately, in answering your question, Steph, the reasons that that SAN had previously withdrew are capital constraint reasons, which we've resolved, or we continue to resolve. So.
Hi, good evening there, Andy.
Hi.
Welcome to Coro.
Thank you.
I wanted a definitive answer on the actual the ratio for the shares to sound shareholders.
To sound shareholders, I believe it's 6 to 1. Let me double check and I can confirm to you. 5.5 to 1.
5.5.
So, yes.
Okay, super. Lovely.
That will be coming out to you shortly as well.
Okay, great.
If not already. It's in, yeah.
Okay, great. Another part is, how does the share register look like? I mean, if we were to picture it with institutes and...
Yeah, so that's a good question as well. So some of the parts here, we've got SaffronEnergy, which now has 200 million shares in issue following the placing of £560,000 to Continental we announced this week. Saffron's owned, just over 50% owned by Po Valley Energy, which are obviously a company that we're acquiring and bringing their assets in. Po Valley Energy itself is owned 50-odd% by its directors. Those directors are obviously going to be subject to orderly market agreements in the ordinary course of business because of the significant size of their transactions. So you've got some surety there that they will be invested in this new business moving forward. You've got SAN Energy, which is also predominantly retail shareholder base, but obviously you've got great institutions there in the likes of Continental and Morocco. And then in terms of the new fundraising, we've obviously brought Continental in further. They're investing 6 million. I think on a fully diluted basis, they'll have a shareholding of 17-18% of the enlarged entity. So with respect to that, it's very important for us to build those institutional relationships because they can offer you decent sized tickets for future capital, but also needs to be able to be collegiate and work alongside our retail and other investors. So they're relationships that we look to grow. And you probably know thematically in terms of James and the Holy Trinity, if we're going to refer to it as that, that those private investors are very valuable. And rest assured that any further financing or any movements forward, we'll try and be as pragmatic and open as we can be to allow all and every to participate, just quite like we've done now with the open offer.
Given you stated that the private investors are very important to you, could we discuss why post when we come back to market, the private investors are given an opportunity to have a raise, yet we're not having warrants attached to our placing, and yet you guys have? Okay,
so in terms of that, what you've got is two different instruments. I think you've got an investors committing now to fund the business in advance of the admission document going out, the lead time to get shareholder approval and so forth.
I committed a long time ago.
What you have in an open offer is an option on a look-back basis to participate at the price. So these guys are putting up financial risk today, and therefore they're receiving a warrant as an attachment towards that. In terms of the open offer, in terms of mechanics, it's very difficult to be able to offer warrants out to retail investors on that basis. And also, it's as I say, you get they already have, in fact, the option inherently in being the open offer as a transaction.
That's not really, it makes no sense. You know, every other company managed to do that.
It makes no sense.
There's plenty of other companies that do placings that offer warrants at the same time.
Correct.
And in fact, SrON did them originally, and I used to hold 1 million of SrON in the day of 14, 17p. So I think they did a placing at something like 4 or 5p with attached with warrants at the time. Okay. There was lots of private individuals involved in that placing at the time. Yeah. So surely we could replicate that. It's been done before.
But again, I think the point there remains that in terms of an open offer, that in itself is an option. So in order to receive, by taking up an open offer, you take up the option, and on taking up the option, you're issued an additional option. It seems like that person's in a more privileged position than the person who's taking upfront capital risk today in advance of all the unknowns. for the uncertainty to come at a later date?
I think that person would be in exactly the same position as Greenbury, being an existing investor, if they were offered the same terms. But they're not being offered the same terms, are they?
They're being offered the opportunity to participate at the same level, not the same terms.
You have to agree.
These are two different transactions at the same time as well, though.
You know, as far as I'm concerned, as an existing Saffron shareholder who will be voting against the merger, because of you're not attaching warrants to the placing, we're being penalised.
Okay, well, that's good feedback, and maybe we can pick that up in the bar afterwards in terms of an opinion.
Okay, thanks a lot, Andy.
Thank you.